So how can you use a company financial statement to discover fraud within the company? All fraud shows up first on the P&L statement. It can be something as simple as the numbers being off, sales being low, expenses being high. It can be an example of expenses being diverted from one department to another if it's an inside job. It may even appear in alternate places. For example, there was a scenario we looked at where there was a McDonald's franchise that had fraud happening internally, and it showed up as a food cost was being higher a percentage than normal. So we looked at maybe somebody's overpaying for food or too much food was being purchased. It turns out it was something as simple as under-ringing sales and taking cash from customers. That lower sales for the same amount of food processed through showed up as a food cost percentage being higher. The way to look at it is look at the percentages of costs on your different line items on the financial statement to see which ones are not matching prior years, not matching industry standards, or something that just doesn't seem off maybe just on gross profit. You can also look at Benford's Law, which is analysis of leading digits of every number on a financial statement, and there's a natural occurring pattern of those numbers. It's not a random distribution of the same amount of ones or twos or threes. There should be more digits numbered 1 than there are numbered 8 on the first digit of every number. If your gross profit percentage is off, compare it with best practices for your company, industry standards, maybe even historically what has happened in your company. Soft fraud might be an example of just incompetence. If your management is incompetent, it might not actually be fraud, but an example of where management knows they can do better, knows they can do more, but they're being paid enough as is, and that might show up on your financial statement. It's not hard fraud where somebody's stealing money, but they're stealing in terms of not performing as well as they could, and that's kind of an example of excess payroll. If someone's overbilling on their payroll, intentional or being mismanaged, that can show up on your financial statement as well. So detecting these types of losses or liabilities can be done with a qualified analysis of your P&L.